Just to give you an introduction, I'm Jamal Khan. I'm a senior tax partner at Churchill Tax. And I specialise in planning for wealthy individuals and corporates. I also specialise in dispute resolution and negotiations, mostly settlements with HMRC, where the cases have got out of hand. So people tried negotiating with HMRC and it's not going anywhere, and things have gone really horrible, and things are in tribunal, and they would come to me, and I would intervene and reach a. And I've got so we're a national firm. We're based in a number of towns around the country. Got Hazel Johnson here, who's our tax director for the tax planning and advisory side. And I've got Dave Jennings, who's our tax director for investigations and dispute resolution team department. I'd ask Hazel to give us a few moments to introduce herself, and then same for Dave, just for the benefit of everybody in the room. And yeah, Hazel, go to you, please.
Yeah, my name is Hazel. I have been involved in tax planning for high net worth individuals and more generally for the last 30 years. So I do, UK inheritance tax planning, owner-managed businesses, offshore trusts, a wide range of experience. I trained as a barrister originally, and I've worked for both the Big Four and smaller sort of top 20 firms.
Okay. Dave, over to you.
Yes, good afternoon, everyone. I'm an ex-HMRC Inspector of Taxes. I spent some 20 years with the Revenue and Customs investigating individuals, high net worths, corporates, multinationals, famous people, and the like. I then joined Grant Thornton in 2006, gamekeeper turned poacher cliche, and I've been helping clients dealing with HMRC issues. Since then. I joined Mazar, top 10 firm of accountants, in 2013, and I've been at Churchill since the start of this current year. So I've some 30 years experience of both sides of the fence with HMRC investigations and disclosures. So I know the ins and outs of the revenue and what they do and don't do, and I'm there to help clients of accountants, clients of solicitors, and then individuals who come forward to me separately to help with any HMRC problems. Thank you.
Julian, do you want to take a few minutes just to tell us a little bit about yourself, please? You're on mute.
Sorry about that, some background noise. We've been going since 1992. We're completely independent financial advisors and a separate independent mortgage advisor and insurance network. The key thing with ourselves is I'm from an advising background, and we like to be able to say to clients that we can give them the best possible independent whole of market advice and services and products selected from the whole of market, and they get the best possible rate from those providers. We got competitive charges, and we're expanding steadily.
Thank you for that, Julian. That's very useful. So do you operate across the country?
Yeah, we've got advisors throughout England, Scotland, Wales, and Northern Ireland. All of our systems are online. So all our training is done online using our intranet and Skype or whichever platform. And so and all of the files are uploaded onto our online system. All of our remunerations all online. So advisors don't have to travel anything to anywhere, any training venues. We do it all remotely using technology. So when lockdown happened, it hasn't affected us centrally at all.
Sure. Yeah, I mean, yes, that's actually that's something that we've had to resort to. Life has changed so much over the last 3-4 months. Or 3-4 months ago, we would sometimes resort to using Skype when an online meeting was required, and that was about it. But now we've gone into the world of Teams and Zoom, and now we've actually forgotten about Skype. Nobody uses Skype. All about Teams and Zoom and online presentations, webinars. So we've gone quite a lot.
Yeah, it's normal. It's normal life for us. Our head office, our head of compliance is based in Bath. We've got a senior manager based on the Isle of Wight. I'm currently in Essex, and TNC supervisors are based all over. So and we tend to have impromptu, online meetings. You just Skype anyone when you want to speak to them. So then, to some extent, more accessible than when you're in an office.
Precisely. Right, let's make a start. Conscious of the time. I'll briefly talk about some of our core services and take you through in terms of what we do offer, what Hazel's role is, what Dave's role is, and the departments that they look after. Let me share my screen. Oh, no, that's not the one. Can you see my screen?
I can.
Right. So Churchill Tax Advisors, we're one of chartered tax advisors, ex-HMRC inspectors, and with Hazel, she's a tax barrister. So we are very uniquely positioned in the country in tax, planning, advisory, dispute resolution. So everybody within the firm, especially the directors, are very, very knowledgeable. Leading team of UK's chartered tax advisors, ex-HMRC inspectors. We've got, it says over 140 years, but now it's about 70 years of combined experience. And we've got the whole team available on the website if you want to familiarize yourself with who we are. Core services. We offer tax planning, which includes all types of tax advisory work, inheritance tax, capital gains tax, income tax, onshore, offshore, etc. Trusts, we will cover that. And we've got tax investigations, which is Dave's department. HMRC and investigations, then we've got forensic accounts and fraud investigation work. That's once again a very specialist and niche area that we get instructed on very regularly. Tax planning, what does it cover? We look at capital gains tax. We are one of the very few firms in the country that offer 360 degrees tax planning. What that essentially means is you can cover capital gains. We will cover capital gains tax, inheritance tax, corporate tax, VAT, protection and control of family assets, protection of minor children, income tax protection, income tax mitigation, will, tax efficient will. Now everybody can get a will done, but is the will tax efficient? Power of attorney, corporate restructuring, HMRC clearances and rulings. Essentially, we cover the 360 degree model. And what I will do now, if I can quickly share another screen. Second. Can you see my screen with the external? Yeah, there you go. So what we have here is a typical example of clients that we see 2 a week. Every week we see similar scenarios, just the numbers are slightly different. We have typical scenario every week. Husband and wife, husband is 65, wife is 63, husband has some kind of a medical condition, wife is generally in good health, husband is a higher rate taxpayer, wife is a basic rate taxpayer, or even a higher rate taxpayer. They have a number of children. Some of them are over 18. One of them may be a minor, under the age of 16. Their assets, main residence, 650, maybe 1,000, maybe £1 million, with a mortgage. And then they've got a 5% investment portfolio of roughly, say, 6 million, maybe £10 million, 5 million or 3 million. It's just the numbers are different. And they've got a mortgage in place. They've got some cash savings. And the net equity in the estate is roughly 5.1 million. Combined inheritance tax allowances of 225,000 each. They don't get any surplus allowance because the net equity is above 2 million. The taxable estate is roughly 4.5 million, and the inheritance tax, if the wife and the husband and wife pass away, is 1.8 million. And that's your main problem, number one. And most of the people that when we speak to them, they don't know what to do with that problem. They have been to advisors, accountants, etc., but there is no solution to this problem. Problem number two is capital gains tax. If they want to transfer their properties to their children, they will have to pay capital gains tax. They will not have the money to pay it because it could be substantial amounts of money. Problem number three is your Section 24, which is the rules that were changed to stop tax relief on mortgage interest. And every landlord that we come across has this problem, where their tax bill is effectively 67% of the rental income, and this can be quite high. It's not you're no longer paying tax at 40%, but you're paying tax at 67% essentially. Stamp duty on transfer to children. We call it LBTT in Scotland. That's your problem number four. Protection of family assets in case of divorce or bankruptcy. For example, if the parents give any assets to the children and children get into a bad relationship, they can end up losing 50% of the assets. 6 is your control of family assets by husband and wife until their demise. So if husband and wife have worked hard to put together a portfolio of assets, they don't want to give it to their children because it is for them to enjoy the assets for as long as they're alive. Yes, they can pass it on to the children after their demise, but not before that. Problem number 7 you've got is protection of minor children. If parents pass away, leaving behind minor juvenile children, the government doesn't care. The government will come in and take the asset, take the tax, the 40% tax, leaving the entire state less than half or half. But children will not have the maturity to deal with. I mean, we see 4 or 5-year-old children being orphaned, and there's been no steps put in place to mitigate the state's tax or tax on the parents' estate. This is a very serious point. A lot of people just don't understand the significance of protecting minor children. Tax efficient will. Yes, there is a will. You can get a will on the internet for £39 or £30 these days, or you can go to a lawyer for £250, £300. But is the will tax efficient? That's the very important point. A lot of people just do not understand that it's not just about transferring between husband and wife, because that could potentially be very disastrous if you look at it from a tax planning perspective. The next point is lasting power of attorney. 9 out of 10, or should we say 99 out of 10, 100 people that we see don't have a lasting power of attorney. How to do it, what to do it, how to do it, what is the significance of a lasting power of attorney? A lot of people don't understand that. So what we offer here is our tax planning is 360 degrees, and we'll cover all of the above. So we will solve every single of these 9 problems. And I said we see 3-4 times a week, every week. And we are very, very niche in a model that will solve all these problems. But just to give an example of Section 24, this is something that we did for a client last week. Came to us, a couple of very well-known solicitors, very, very successful solicitors, should we say. And he asked me to put a comparison for him in terms of what his current position is, which is rental income and employment income, etc. We have not looked at the employment income, that's quite a lot of income. But rental income is £150,000, and with the Section 24, his overall tax bill is about £61,000. But with our model, partnership model that we use, we can reduce his income tax to £22,500, helping him save £38,750 in 1 year. And there will be many years to come. Plus, this guy had inheritance tax liability of roughly about 2.4 million, 2.5 million, and we helped him save that as well. Okay, I shall move on. Let's see. Right, can everybody see the tax planning 360 degrees now?
Mm-hmm.
Okay.
Yeah, good, thank you.
So this is one of our models that we use. Partnership structure, LLP, or partnership. where we transfer the properties into a partnership in such a way that there is no capital gains tax and no stamp duty. We add the children as partners. We make gifts in such a way that once again there is no capital gains tax or stamp duty payable. And that allows us to also transfer some of the equity to the children, which triggers a 7-year clock for inheritance tax purposes, which is down here. And if the parent survives the 7 years, then we effectively eliminate the inheritance tax altogether. The first 3 years are a bit risky. If somebody dies within the first 3 years, you pay inheritance tax at 40%. Then it starts to go down at 30, 10, 20, 10, etc. After 7 years, it goes out of the estate. Why do tax planning? Well, first of all, you mitigate your tax risk. But we sometimes get people to say, what if they change the rules 10 years from now? What if they change the rules 20 years from now? What if they change the rules 7 years from now? Well, the way I look at it is these rules have not been changed for the ones that we're using, have not been changed since 1975, when the Statement of Practice D12 was released. But you can either do something about it, or 7 years later, you might be sitting saying, regretting to say, oh, they didn't change the rules. I should have done it when I had a chance. And this is, in my view, it's very important. It's very important that we are proactive and we do everything we can to save tax. Yes, they might not change the rules 10 years. They might change the rules 10 years from now. What about the annual savings on income tax that you're making? So this solicitor, we help them save £38,000 every year. That could be a lot of money for some people. £38,000 in tax every year, and then 2.4 million, 2.5 million on the inheritance tax. Once again, we look at protection for minor children, peace of mind. David, do you want to quickly talk about the tax investigation side in terms of what you cover?
Yes, thank you. So the services that I can provide and the work that's included in my experience and skills, it covers the full range of issues that anybody may have with HMRC. So on the screen here, you've got some of the technical terms that the revenue call various types of investigation. And they're under the specific rules and regulations that the revenue follow. Code of Practice 8 investigations are those where the issue is usually something that's complex. It might be technically difficult. It still might be an allegation of fraud, but usually it's where the revenue just disagree with a point, and the issue might be particularly difficult in law. And require senior inspectors within the revenue to deal with. The Code of Practice 9, on the other hand, is where the revenue allege that fraud has been committed. And Code of Practice 9 is the most serious type of civil investigation that HMRC can do. And it's just below a criminal prosecution. So in the worst case scenario, if a client has been alleged to have committed tax evasion, they can be prosecuted. Prosecution goes through the standard common law courts beyond reasonable doubt and facing prison sentence or fines and recovering of assets that were committed as part of the fraud. However, the revenue don't have the resources to criminally prosecute everybody, and it's not in the public interest to criminally prosecute every single tax evasion case. So what the revenue do is they agree to settle those cases in a civil matter. So it's just between the client and HMRC. Obviously, if you've got something that's a serious matter, you do need a professional tax advisor. So what Code of Practice 9 allows is that you sign a form at the initial start of it, And if you accept that fraud has been committed, that will then give you an immunity from prosecution. So you do have to admit that you have committed fraud, but what that gives you is a total guarantee of immunity from revenue prosecuting and the risk of prison sentence. What the revenue then expect is a full cooperation of the investigation and a full disclosure of all matters. And usually the revenue will hand that investigation over to the expert professional who will compile a report on behalf of the client, setting out all the issues and the liabilities, and the revenue then will review and agree and accept that or ask some further questions. These Code of Practice 9 investigations are handled by the Fraud Investigation Service within HMRC. They sit next to the criminal prosecution team now in the same office, so it is serious and they can swap information between each other. The revenue overall has a huge amount of data on everybody in the UK. They get this from all sorts of sources. The database is called Connect, and that includes land registry data, SDLT returns, voters registrations, council tax, planning applications at the council, DVLA records, mobile phone records, boarding passes coming in and out of the country, information from merchant trade, eBay, and they do review social media. So that all goes into the reviews that the revenue undertake to decide who will face a compliance check or inquiry, who will face an investigation. And obviously the most serious ones might be criminal, the less serious could fall under the Code of Practice 9 or Code of Practice 8 inquiries. And at the same time, the revenue will look at all duties. So if it's a business that should or is VAT registered, and that will include the VAT investigation and potentially customs investigations as well for excise duties. So it's not always one particular duty that the revenue investigate. They can do a full review and check across everything, including PAYE, employment tax, corporation tax, income tax, everything you can think about. If the revenue alleges that something's gone wrong, then they will want to review it, and they have a huge amount of powers behind them to pursue that. As I mentioned in my introduction earlier on, I have some 30 years experience of investigation, both undertaking those on behalf of HMRC and defending them on behalf of clients. My defence work has included expert witness for criminal prosecutions, been assigned by barristers to provide reports on criminal prosecution defence, and also in the matrimonial court, I've provided expert witness reports for complex tax affairs where the spouses might be in dispute over funds, and obviously tax is an important part on how those funds might be distributed. Within the revenue's powers overall, they can refer to the Proceeds of Crime Act as well, and what that means is if found guilty of tax evasion, then the Proceeds of Crime means that they can then recover all assets to pay any liabilities, and any assets that can't be proven to have been obtained from genuine sources, genuine payments, can be recovered by the authorities. You may recall, or you may be familiar with, for instance, the Al Capone case. This is the one that's frequently quoted. If government authorities are unable to prosecute somebody, for instance, can't find any evidence of guilt for another problem, such as in Al Capone's case, liquor, when there was the prohibition, or these days there might be human trafficking, drugs, it could be some other illegal trade. If the prosecuting authorities are unable to raise a case against those points, they can instead prosecute for tax evasion. So if you're a criminal and have received funds from ill-gotten gains and you've not completed your tax return, you could face a tax evasion prosecution. And not completing a tax return, failing to notify, is a much easier charge to stick. And there only have to be £5,000 of tax owing to raise a criminal investigation and go through Proceeds of Crime Act. So what that means then is if you are found guilty of tax evasion, proceeds of crime kicks in, and potentially the authorities can recover all the proceeds, not just relating to the tax, but relating to any proceeds from any gains that you can't prove was from legitimate means and legitimate funds. That's why it can get very, very serious and you need a specialist. The first tier and upper tier tax tribunals are the standard route to take appeals through the court. So if the revenue raise assessment, issue a decision notice as part of an investigation or inquiry, then the next port of call, if you can't resolve that appeal, can't resolve that dispute directly with HMRC, you can take that appeal to the outside tribunals. I have experience of assisting clients and taking clients through the first tier and upper tier tribunal. My colleagues here at Churchill Tax, Jamal and others, Phil Webb, who's also part of our investigations team. Phil is an ex-advocate at HMRC. We've together got a huge amount of experience of taking cases through the tribunal with some successes. Beyond that, it would go to the Court of Appeal and ultimately the Supreme Court. So there are a lot of defences that can be undertaken against the revenue to stop them from using powers they shouldn't be doing, or when they get things wrong or there's a disagreement. The revenue certainly don't get it right all the time. They do make mistakes and they do take cases through the court that they shouldn't have done. And we have many, many years of experience in handling these cases and defending clients.
Thank you, Dave. That's very useful. Let's move on. Forensic accounts and fraud investigation. So this is a very increasing niche area where we get instructed, and there is people looking for forensic accountants. This is actually in company and commercial disputes. We got instructions last week on a partner restaurant, very successful restaurant. One sleeping partner, two active partners, and the sleeping partner suspecting the active partners of swindling the accounts, taking a lot more cash in hand, or cash sales and not declaring it. And this guy, the sleeping partner, losing out significant, over £10 million over the course of a couple of years. There's commercial disputes, once again, when partners, when there's fraud within the company, we get instructed for that. Last week we got another instruction for a company accusing its accountant, a bookkeeper, of swindling cash. So we would get involved also in divorce settlements where normally the wife would come in and say, my husband is not declaring all his assets in the divorce form E. There's a lot of assets missing, she feels, and there are some monies being sent offshore. So we would get involved in asset tracing, fund tracing, valuation of assets, valuation of businesses. We would put together an expert witness report. So this is a very niche area, once again. Let me just quickly stop sharing this. We do get most of our business from what we've said here is brokers, accountants. Most of our business is coming to us from people that we work with, professionals like yourself, Julian, and your network. Most of our business is word of mouth, and we take pride in our relationships. Just to bring some background for what Hazel gets involved in. Hazel has, if you can give one or two examples of the things that we've done in the last 2 or 3 days, rather than over a longer period. Just last 2 or 3 days, just so that you can get an idea, Julian, and the audience, for how her technical expertise can be useful to many people. Hazel?
Yes, so we've had clients who have got property portfolios where they're They're looking to manage them more tax efficiently, how they should hold them for the future, thinking about inheritance tax planning. I've had people coming to me with long-standing family trusts which have been holding property, and again looking at how we can manage the transition of those properties onto the next generation in a tax efficient way. With some other sort of property transactions which have been sort of development related but have gone underwater, and how we can help people restructure that tax efficiently so that the project can go forward with new investment. So, I mean, a lot of property work, but there's been, you know, more broad and more wide work also that I've had to deal with over the last couple of days.
Excellent. Julian, just from your side, if there's any questions that you have, or then we can get to the audience for any questions.
Yeah, no, that all sounds really interesting and useful stuff. There's obviously quite a bit of overlap between what you do and what we do. And so obviously it's for each individual advisor to make a decision as to when they get to the limit of their expertise and when they would need to call yourselves in. But I think that's quite an easy judgment for each IFA to make, because they know obviously their areas of expertise and where they don't feel comfortable.
What would your typical IFA cover?
Well, if you take just one instance, if you take wills and LPAs, some IFAs obviously arrange those all the time and work out tax calculations for IHT, etc. Obviously, as part of my advanced financial planning certificate in taxation and trusts, it obviously covers all that to some extent. But obviously not to the degree of expertise that yourselves have got.
Sure, that's very useful. So where you have a client, the example that I showed to you, typical example, a large property portfolio, investment property portfolio. How would you normally deal with something like that? The one that I had in the example.
Yeah, obviously, personally, I stopped advising in 2014, but it's down to each individual IFA their degree of expertise, in calculating each individual client's circumstances and how far they would go in terms of their financial, their holistic financial planning and advice, and where that would, where they would reach the boundary of moving into expert tax advice, which obviously you provide.
Sure. Just on top of what Hazel alluded to earlier, we would get involved in getting rulings from HMRC. Appearances from HMRC where there's a grey area, we would write to HMRC. We have the right channels, the right protocols, the language that we speak with, the language that we use, which is based on the legislation. So there's a lot more, especially if there's any offshore assets held or assets held through an offshore entity. We would come in and we would put everything in order for the clients. But more importantly, what's happening with these war at the moment, where people are having to see their tax bills rise significantly. Tax rate. Right, excellent. Let's see if we've got any. I've been asked to talk more about Section 24 and how that can be mitigated Section 24 applies to people who are higher rate taxpayers, and the income is so you don't get tax relief on mortgage interest, and that's effectively being phased out. People this year would be paying a lot more than last year, and so the tax relief has been phased out. Well, what we do essentially is to set up partnerships, management companies, etc., and add more people into partnership within the family, and allow members of the family to benefit from the income, not just one person, which brings average people of the family to beneath the higher rate tax fund, and therefore the Section 24 doesn't bite any longer. At the same time, we use management companies, SPV companies, to mitigate the tax within the partnership, and therefore the tax being income allocated to the partners, and hence the Section 24 being avoided altogether. On average, as I said, we would help a typical client save between £20,000 a year in income tax. A higher rate taxpayer earning something in the region of maybe £120,000. But the numbers vary for each scenario, but usually the clients walk away. About the 360 degrees tax planning. 360 degrees tax planning is a very unique form that we offer at Churchill tax. Normally, when people go to a tax advisor firm or a tax consultancy, they would typically advise you on inheritance tax or capital gains tax, but they wouldn't particularly look at stamp duty or VAT or protect minor children or wills, etc. Or a second review on the wills, or long-term capital gains tax planning, or assets, as I said. So this is we get instructed on, yes, Jamal, we've had tax planning advice from such and such firm. Is there anything you can add, or is there we get instructed on for a lot, and we would make sure normally whenever we're instructed for a second opinion, we will add value. Not from maybe the inheritance tax planning has been done very perfectly well. Maybe the capital gains tax planning has been done perfectly well, but there is something that we can add to that. So we wouldn't criticize what's been done. We would just add to it that you could do this and this on top of this, and that will help you achieve a bigger objective. Next question, there's been what assistance can Churchill Tax offer at drafting of a will? Drafting of a will is, we would normally not draft a will. We would review a will. We don't get involved in drafting of wills. We would review a will and put together one or two clauses in the will that can make it more tax efficient for the family. So one typical scenario that I see is leave everything to the surviving spouse. I call that the ticking time bomb that grows. If we have an estate of £5 million and husband passes away, it leaves everything to the wife. So the tax on that could be, or let's take a £10 million estate just for the sake of numbers. If the husband paid tax on it now, passed it on to the children, that would be £4 million in tax and £6 million going to the children. But what happens now is we leave everything to the wife. The wife lives another 10 years, and the properties have gone up to say 20 million. So when she passes, the tax liability is not going to be 4 million. The tax liability is going to be £8 million, and that will bite very hard. So it's very typical standard tax planning, and I've done lectures and seminars for solicitors, large groups of solicitors, to say, guys, you are advising on this mirror wills, but do let your clients know that this is a growing time bomb. Then there are better ways that you can pass on to the family through partnerships, etc. Which is a lot more. But once again, we don't prepare wills, we advise on wills. Right. Next question: how do you refer to? And you have fixed fees to review? Yes, we will. Before we take on any assignment, in fact, me and Hazel were on a conference call at 10 o'clock or 11 o'clock this morning with a client, and we will always give a fixed fee before we start work. We very rarely work on hourly basis, as most of the other firms do. But I prefer, and we even for tax planning, we will give you a fee. For example, it will cost you £1,000 or £2,000 or whatever it is for us to do X piece of work. So there is no dispute at a later stage. What client who hasn't disclosed rental income? Yes, that's another question. Is what do we do if a client hasn't disclosed rental income for a number of years? If you're feeling nervous and if you're feeling guilty, speak to us. We have special channels that we can disclose the rental income to HMRC, and without you being persecuted or bullied as if you were going to have an investigation. There's a lot more pain-free process with minimal penalties, and you don't get named and shamed and everything. We get inquiries like that almost on a weekly basis. I constantly have a couple of rental properties, and I haven't declared my rental income over the last 15 years. We had one lady just walked into our office one day, I think it was last year, and she had about 23 properties, and she said, I have never paid any tax, and I want to put everything right. We helped her, and now her life is a lot. So, and we will get clearances from, we will take on the case, we'll go right to the end until we've got a closure notice from HMRC. Next question is, do you design tax systems for property investors and property developers? Yes. So we have a lot of inquiries. In fact, we are working on a couple of, Hazel is working on a couple of inquiries at the moment, projects where we've been instructed by developers to set up a tax efficient vehicle for them. We got instruction yesterday on a client who's doing three development projects a year. 40 flipped, smaller flips, and this guy expects to make around £7 million a year, and he doesn't know how to structure everything in a most tax efficient way. Wants to buy a personal house for a couple of £1 million. He needs to extract income from there, from his companies, from his businesses. How does he do it? That's where Hazel will come in, and Hazel will be able to help put together an appropriate strategy. Once again, for the rental income, you need to disclose anything, or if you've got problems with HMRC, you go to Dave. Any advisory matters, you go to Hazel. Next question. I'm assuming the questions coming in. Government has increased HMRC powers to investigate. How do you see that pan out? I think, David, if you quickly cover the increase of tax investigations since the lockdown, or after what we're seeing in the next couple of years, just maybe a minute or two, that might help the audience.
Yes. So, I mean, one of the most recent changes in powers, which certainly, if you're an employer or you're self-employed and you've applied for any COVID grants, for instance, then that's an area where we've seen very, very recent changes in legislations. There was the draft legislation was published last few weeks, and a consultation whereby any queries, any comments that people wanted to make against that draft legislation closed last Friday, the 12th of June. So this is very, hot off the press, and the revenue's intended new powers are to recover any grants, furlough payments, self-employed payments that have been claimed, for instance, during the COVID period, that shouldn't have been claimed, and that may be through error, mistake, some reason why it's been overclaimed, or if it's in the more serious category, deliberate or fraud. The revenue will be able to recover those payments up to 100% of the amounts that have been paid out incorrectly. There are penalties that will also apply to that. Those penalties can be up to 100% of the amount that has been claimed fraudulently or by error and mistake. The legislation is quite complex, and there are some unknowns around how the revenue might distinguish between genuine errors and cases where the revenue think that it's been a deliberate claim for a grant that shouldn't have been obtained. There is a short window to make a voluntary disclosure. If you check your systems and think you've made a mistake, then certainly get advice. That window is 30 days after the date of the legislation reaching royal assent. I mean, it's become, in law, it's become a power. They're trying to rush the finance bill through during July, so it's not very long away, or 30 days after receipt of the payment. So if you receive future payments after the law becomes enabled, you will then have 30 days after receiving that to amend it, change it, disclose it. If it relates to a past payment you've already received, you will only have 30 days after royal assent to make a disclosure. The reason for making the disclosure first is to avoid to reduce the penalties. There may still be a penalty charge, but you could be facing half the amount or potentially zero penalty if you come forward first. So that's a very recent change. Linked to that, and there is a specific clause within the new legislation that makes directors, joint and several liable for those payments if they're not repaid to HMRC, or if it's a company is put into liquidation. The directors then will face those liabilities. The revenue can transfer it to them. That's also mirrored in changes the revenue intend to alter on preference for tax debts owed to HMRC. So since 2002, I think the last changes where the revenue lost their preferential status for tax debt, they are now regaining that preferential status for corporate tax debts, for instance. So therefore, they will step above non-preferential creditors. So just below the banks, for instance, who've maybe got a charge on property. So directors of companies need to be very, very mindful and very careful about thinking they can liquidate a company and avoid tax duties and debts, because they could be switched to the directors personally. And if you set up a new company with a similar trade, with the similar owners, the revenue can issue what's known as a bond, a security against that new company for future tax debts that they think the company will incur going forward, and that can cover pay-as-you-earn, VAT, corporate tax, and if you're in the construction industry, CIS tax as well. They can all be estimated in a charge put against the company. There is the rights of appeal, and I've been successful in dealing with those appeals against such bonds, but certainly if you're in that situation, you need to take professional advice.
Thank you, Dave. And let me just quickly, if we'll take one of the last questions because I've got to shoot off in a few minutes. If there is a client who has transferred property to his family as part of the will, when he seeks tax advice, what options does he have? This is something I did last night. In fact, it wasn't for a client, but it was for one of my old friends who's a GP. And he was asked to set up a trust and various. He asked me, Jamal, can you just give me a second opinion? And I looked at the trust and I said, well, the trust doesn't have anything in it. It's a shell trust, and then it becomes active when you die. So it has no use as such. you will not be able to save any tax with this trust. So it's always worthwhile getting a second opinion from an expert, from a tax specialist, to see if there's any risk with the or if actually what you've done achieves anything rather than just paying fees. One question I'll take, last one. Common success on reclaiming overpaid VAT in error to HMRC on EU sales demanded by relevant EU tax authorities past the reclaim period. Yes, there is. You can always claim, and there have been a couple of tribunal cases in the past where the taxpayer has been able to claim overpaid VAT. That's Dave's department, and I will share Dave's details if you want to talk to him in more detail. I'll share everybody's contact details, email addresses if you want to contact. Share my screen quickly. Okay, can everybody see the screen?
Yeah.
So contact the speakers. Here are the emails if you want to make a note of the email. So as for me, for Dave, for me it's j.con at Churchill Tax Advisors. Dave is Dave d.jennings at churchilltaxadvisors.co.uk. Hazel Johnson at Johnson at Churchill Tax Advisors. Or in fact, what I do suggest is if you contact our main person who coordinates matters for us, is Ada Ali at Churchill Advisors. It will be difficult for anybody to get hold of me or Dave or Hazel instantly, but Anar will be able to coordinate matters to the right team member.
Jamal, can you just expand that screen so the slide is shown in slideshow mode because it's too small to see?
Oh, I beg your pardon, sorry.
Scroll through.
Is that clear now?
Yes, it's clearer.
Mm-hmm.
Yeah.
Sorry, I didn't realise. Right. So, main point of contact, I suggest if you keep it at Ali, and well, you can contact me or Dave or Hazel. The contact details are there. You can contact our office telephone number and let us know that you contacted us through the Julian Harris webinar, so we can track. Here are the contact details if anybody has any direct questions for the team members.
But Ali is the main point of contact for anybody.
Ali remains the main point of contact. As I said, Ali will be able to coordinate to the right team members. It would be difficult for us to if he comes to me, I might not be the right person for the question, but Ali will be able to find the right person for you. Right. Let me see if I can come back to the main screen. Right. I have also been asked to put Ali's telephone number just in case. So I will add that 0736727. I will share my screen again.
I can forward those details on if you email them to me. Obviously, we message out to all members on a daily basis.
Yeah. Just give me a second. There we go. So Ali's number is here, 07367276788. So if he wants to contact, speak with Ali, and then we'll take it from there. Right, excellent. if there are any further questions, I'll take them now. But I think we're done for today. Julian, it's been a pleasure. If you've got any questions, Julian, you can speak to me. You've got my details there. You can speak to Ali, and we'd be more than happy to help any of your IFAs or any of your team members. If you want to do another kind of a more specific session, more than happy to help you as well.
Yeah, no, that's great. Thanks, Jamal, Dave, and Hazel. It's really good to get we couldn't get into the real nitty gritty, but it was good to get a bit of a flavour of what yourselves do, and a presentation from obviously some expert tax specialists, which is really good for us and quite different to other presentations that we get.
Excellent. Before I go, I do apologise. I think I've got a message from one or two people that the sound quality hasn't been well. But considering I'm in Essex, you're in Essex, Julian. Hazel is in, I think, somewhere in Milton Keynes, and Dave is in Manchester. And the weather is not behaving so well. So there has been some problems with the internet, so I do apologise in advance. But everybody should be receiving a recording. Whoever's registered for this session will be receiving a recording within the next 24 hours.
I think obviously some of the sound was difficult, but we've got the slides as well, which are useful. And any other written material, I'll be happy to forward on as well.
Excellent. So I will get the written material sent to you as well. And you can forward on to your team, and we can take it from there.
Excellent, Julian. Thank you.
Thank you.
Good to meet you.
Well, thank you, everybody. Right. Okay. Bye-bye.
Very much. Bye.